Welcome, everybody. What's up to members and non-members on Twitter and social media? Some interesting things to talk about, and we'll keep it pretty brief today. Don't want to keep you all night long. But if you guys remember, and those of you, this is not a shot at you, Trey, but those of you who were on the Sunday webinar, we were talking. We do a lot of complaining. I'm Mr. Complaining. I like to complain a lot about, what we're not getting out of maybe flow and price action. And, if you remember this last webinar, all right, which was last Tuesday, so even if you're a non-member, you'll probably recall what we were discussing was basically we weren't seeing the second part of the rotation, right? That was the main topic. And you could sense the frustration in my voice because what we wanted to happen, we wanted to see those crowded names, right? The bond proxies, the software names. We wanted to see money finally come out of these names that feel like they've been going up forever. And finally, we'll see that rotation, right? They start going into the cyclicals again. They start going into the names that they've treated like crap for the past 2 years plus. All right. The problem was, as we discussed, they were coming out of this stuff, right? And we weren't seeing them rotate into the cyclical names as aggressive as we were hoping. Okay. As a matter of fact, it wasn't anything near aggressive. It was extremely conservative, extremely selective, right? You could count literally on one hand names that met that criteria that caught, some impressive flow. So, we spent Sunday evening talking about how, it's like add to a lot of confusion out there, right? You have the momentum names selling off, right? You have these cyclical names now after an initial run, right? Initial squeeze, not seeing that follow through activity as we hope. And what was also interesting was quietly they were rotating back into these bond proxy names again, right? This is what we were talking about Sunday. TLT, the utilities. Okay, so I mean, they're obviously so much for rotating out of utilities, right? Being crowded. So, well, for me, and I guess it comes with experience, but for me, the flow just didn't look healthy. Okay, and we spoke about that. Better not to force anything. Don't jump the gun. We see the huge risk reward capabilities on if there's any rotation, serious rotation into these cyclical names and stuff like that. But without sweepers confirming that rotation, right? And this is the exact line I used Sunday night. I'm not going to go stick my neck out on my own and start putting that rotation trade on in an aggressive way based on my hunch. I've been down that road before. There's a reason why I, religiously pay attention to sweeper activity and sentiment, because if I went on based off my emotion, my hunches, I'd be on the street corner with a cup. I wouldn't be in this game, I'll tell you that much. All right, so I was just, from my experience, I was getting a bad vibe. And if you guys remember Sunday we were talking about, I didn't want to scare anyone by saying that, I used the comparison to last October before the markets rolled over. But we were at a similar spot coming into this week. Okay? Because what happens is, if they're not buying anything, right? They're rotating out of the momentum growth stuff, and they're not rotating into the cyclical stuff anymore. What happens is, whenever there's a catalyst for real selling to come in, there's just not going to be much buying. Okay, and eventually that's going to lead to heavy price action. All right, but the moral of the story here, the point of the story is, and you guys can relate because you hear my mouth a lot, I do a lot of complaining, right? Where is the rotation money? Where is the rotation money? But now we saw today, okay, whether it's a valid excuse or not is irrelevant, but we saw today why they probably weren't aggressively rotating into these cyclical names, right? We were trying to guess maybe it was FedEx. That was a bad sign. The earnings there got like swept under a rug. Nobody was paying attention to it with the Fed and everything else. But, you know, this name shouldn't be acting like this if they're rotating into that group. This is the complete opposite of what you want to see. I don't care what the earnings were, even if they were awful and guidance was awful, you want constructive price action, right? You want to see this thing, some weakness, and they buy it up in the aftermarket. And that tells you, all right, that was an awful quarter, awful guidance, but, you know, the price action is telling us it's already factored in. This right here, FedEx, excuse my French, but shitting the bed off that quarter, made a bold statement that negativity wasn't factored in. All right, kind of the opposite if you remember when the semiconductors violently turned coming out of the December correction. They went into a quarter that was expected to be awful. It was pretty bad, maybe not as bad as expected, but the bottom line was they were rallying hard off awful earnings results. Okay, so this was, if you want to call it, caution flag number one for that rotation trade. Okay, but again, you know, maybe it's a FedEx thing and not, you know, a global thing or an overall market thing. But this was caution flag number one. All right, but then again, we didn't see them rotate into any other names in an aggressive fashion. And then we get today the ISM number, which I know it was a bad number. I didn't think it would be that big of a deal, but there's your answer why we weren't seeing that aggressive rotation into cyclicals. Okay, maybe it comes now. All right, maybe they anticipated an awful ISM, which wasn't too difficult to anticipate, right? A lot of people thought we were going to go down this road because manufacturing across the globe has been awful. It was only a matter of time, really. All right, but maybe they wanted to get this out of the way before they finally do that rotation. But again, that's a total guess. I don't even feel confident about that guess, but it's irrelevant in my opinion now. It's irrelevant. Maybe that Neil Diamond guy took profits. We sure hope so. But you guys understand what I'm saying? The moral of the story is that there's a reason why me especially, and I recommend to you if you're trading off flow as a major factor in your decisions, there's a reason why you wait for that confirmation. Because if they're not buying, right, if they're not aggressively buying weakness, or they're not aggressively rotating, they're likely doing it for a reason. Okay, they may not nail every bottom at the exact low, but over the 20 plus years I'm in this game, right, there hasn't been a significant rally that sweepers didn't play a big, huge part of. All right, so that's what I wanted to start off the webinar today. That whole rotation trade got punched in the jaw officially. All right, and we'll see how that plays out. And now all of a sudden, there's a chance that they rotate back into some of the software names that got the daylights beat out of them. Okay, because they were going into those names because they were recession proof in a sense, right? They're gonna grow as far as earnings are concerned, even if there's some softening in the economy. All right. Well, here's the thing. For the market's sake, we better hope so. Okay, because there's only so many bond proxies and utilities you can buy to hold up an overall market. So if this market's not going to go into a replay of October, and honestly, I don't think it can, based off positioning. That's a whole other conversation we've had and can spend hours on. But meaning hedge funds aren't all in like they were last October. The fund positioning is just not there. So there's not enough selling, in my opinion. There's not enough people caught long. There's not enough money caught long for it to translate into what we saw last October. We could have a pull without a doubt. Okay, but I'm talking about the magnitude of that correction. All right, but what I'm getting at is for the market not to have sustainable weakness on the downside, from the stuff I look at on the day-to-day basis, they have to find something to buy. They have to. Okay, and I'm not talking about buying ATVI weeklies that expire in 3 days. You guys know what I'm talking about. Okay, so we'll see how it plays out. Like we discussed Sunday evening. Okay, the most prudent thing, in my opinion, from this point, right, coming into this week, was to take a step back, right, relax. We're going into earnings season, and let the flow come to us, right? Don't go out there each and every day looking for, again, excuse my French, but bullshit flow to confirm your bias. All right, that's what I'm stressing is pretty important right now, because, and if you're a member, this is why you're a member. You're taking my recommendation here and me sharing with you that I don't like what I'm seeing out of the flow right now. Okay, so it's not a spot to go get aggressive, right? If we were coming out of a correction and the flow's been broad and they're sweeping the board and everything looks bullish and we had sentiment on our side, right? Then it's okay to be like, all right, is there any volume in Tesla weeklies? Thinking about sweepers. Maybe there's a block there so I can use it as an excuse to put on a Tesla trade, right? You can get away with that. Now you're not going to get away with that. You're not going to get away with that. All right. And don't let anybody tell you otherwise. Individual names, right, over the past couple of weeks, it's been awful. It's been impossible. Okay, even if you're not trading off flow, you need, with the type of action we've been seeing in individual names, okay, you needed to get lucky on top of whatever indicators or price action or charts you're looking at. You needed a lot of luck to play into whatever stock picking you were doing in names. Okay, and you don't want to rely on that. All right, your winners, forget about biggest percentage winners, but the smoothest rides, and that's what I've always enjoyed for my career. It was never about biggest winners. Oh, you can nail some calls in weeklies and you hit 500, 600% return, right? But you got lucky, right? If you're honest with yourself, you're like, I got lucky there. I wasn't looking for that. I got lucky. Okay, but the smoothest winners in my experience off flow and sentiment is when everything lines up and things are clear. There's an easy takeaway as far as theme, or in simple English, a story that's coming out of flow and sentiment. Right? You always hear me use the word clean a lot, right? I overuse that word. And the best flow comes when it makes sense. When overall flow is not making sense, that's the best time to relax and in all likelihood sit on your hands and not do much. All right, so that's that's generally what we were talking about Sunday, and it's still obviously up to this day. I mean, look at the flow today. If you were watching the flow today, it was just godforsaken awful. All right, at least in the morning, they were. I don't know, you guys. I saw a couple of you guys nail a pretty decent ES SPY trade off a niner. I just didn't have the confidence to pull the trigger on anything today off any niners because of the flow. But I don't know about how you guys did today. The only two things I played, and I didn't really play them too aggressively, but I came out of the day making some money, so I'm happy with that. You guys probably know ATVI. I traded the equity there, and Roku. And the reason being, it was cheap spec weekly activity, right? So nothing extraordinary by no means, but at least it was clean, right? ATVI, somebody rolling the dice on some weeklies, at least he's not, at least he's not playing earnings there, right? At least it's not a block that we don't know if it's tied to stock or, replacing equity going into earnings in a couple of weeks. He's playing over the next couple of days. He was looking for momentum now. And, I didn't even hold it overnight, which may likely be a mistake. But, I was just looking to make some money off the momentum generated, and that's it. And that all goes back to, everything I just explained to you guys of how I feel about the current environment. I'm not looking to stick my neck out here. There's nothing out there that is signaling to me, stick your neck out, take a shot here. You have some sort of edge. And the other one was the Roku. All right. I don't usually play Roku much. But it was pretty obvious, right? You had a little window there where there were, like 4 little spec Roku sweepers came in. And you could almost see the momentum build up. And I can't blame you if you didn't play the options, because again, I'm looking for the equity and I'm looking for a quick trade off the momentum there. All right. But, there was some nice momentum off the action, and that's all I was looking for. I don't know how many of you traded the calls. I don't know if they did anything special. Yeah, I played equity on both. I rarely play the options when I'm looking to trade this way. A lot of times I'll trade options and I may sell them by the end of the day, but just because I got a move that I wasn't really expecting. 273 to 5. Oh, that's a nice move. All right, so they had a decent move. So they had a decent move. For those of you who weren't around, so you get an idea of what I'm looking at, and how you could pass your time. And again, this is stuff you can understand. You're not looking, okay, even though like Tim's throwing out some crazy numbers there, right? I mean, that's 100% return intraday. And literally, I think it happened in an hour. What I'm stressing to you guys is when I say don't stick out your neck, I'm talking about sizing wise. You don't have to get too crazy here, jump out of your shoes and in a climate like this, right? You want to try to come out of this situation, grind it out in the plus column, right? Maybe nail a nice squeeze, a sentiment squeeze, overnighter here and there, okay? But if you come out making some money and then eventually, things line up where we can get a decent leg higher with some real flow behind it, that's where, your P&L, that's where you're going to make a dent. All right. But this is tough sledding. And that's why I'm so quick to sell these things. Like if we were in a better environment, I probably don't hold the Roku, but the ATVI I probably hold for an extra day or so and see if I can, see a follow through. See if maybe he's got something up his sleeve, an upgrade or something like that. But right now, for me, it's not worth it. All right, so here, if you weren't around, here was the ATVI action here. All right, there was more than this, but this is just a couple of the trades here. Okay, so pretty clear, right? Opening activity, going after weeklies. And don't get me wrong, ATVI is a pain in the neck. I day traded a lot. And I've taken a lot of scratches where this thing does nothing for me and then rallies the next day. That's what it usually does to me. But, risk reward wise, it's worth it. If it doesn't move, I'm stopping myself out for a scratch or a small loss. And if I can make 35, 40 cents off the momentum, that's what I'm looking for. All right. But this is what they were hitting. Again, small dollar amount. This is not anything to do cartwheels over. Just looking to take advantage of momentum that it might generate. Okay. The Roku activity was a better because he laid some wood. And you can see here, same thing, right? October 4th. So this is for this week. That was October 11th, the ATVI. And you can see played a couple different lines here, right? You see the time span, all in a couple minutes. And just so you can see the reaction there. Again, you know what they did. They did pretty well, almost a double on them. But just so you could get an idea here, 11, 13. So right around here. Let me blow this up here. This is a 5-minute chart, so you guys know. Okay. So, and again, I'm not a big Roku player. I know you guys like to play it a lot because it moves, but I didn't have to chase it, right? Usually Roku's up $3-4. You have to chase it. The stock was down a little bit, wasn't too stretched, didn't really move yet. You could see volume starting to stem up there as the action was coming in. And then you got a nice trade out of it. All right, so that's what I'm focusing on. And if you guys are degenerates like myself and many others out there, and you need to find something to trade, okay, this would be the intraday version. And I just wouldn't chase green, right? I say if they buy something aggressively, you see 2, 3, 4 sweeps into some weakness. You like the spot, you like the name, you think there could be enough momentum for you to cash a ticket, scalp, or a quick trade. Yeah, you pull the trigger there. All right. That would be intraday. The only, and this is again what we spoke about Sunday, the only thing as far as overnight, right? We talk about playbook a lot. For this type of climate we're in with the flow looking like this, and being that we're going into earnings season and everything else going on, okay? Impeachment, the Fed, you name it. But the only risk reward that looks even favorable out there, in my opinion, is one of my favorite trades. And that's a play on the actual overall market or a high beta name you think you're going to get a rally in. Right, but be sure you feel confident it's going to rally if you get a squeeze. If you get sentiment lining up, right, the old sentiment squeeze. You get sentiment spitting out bull signals or close to it, a low squeezometer, you get some gamma in your favor. That tells you the squeeze should be worth it. Play some ES or some SPY calls or whatever the case may be. That's it. That's it. You get the squeeze, you take what the market gives you and you call it a day. And that would allow you to survive right now, right? Not get stressed out, not overtrade, not make yourself dizzy. More importantly, not get lumped up when there's no reason to even attempt getting lumped up right now, right? And if you're a Steam Room member, you're here for one reason. I don't tell you what to buy. I don't tell you how to buy. I don't tell you any of that. I don't even pretend to do it. But you have to kind of trust me when I'm telling you, the flow is not favorable right now. It's not, it's ugly. Okay. And from my experience, when the flow is ugly, that's usually a really good time to chill. To chill. Right, exactly. So, right now, okay, we have, and those of you who are shorting out there, I can't, playing especially intraday stuff, and I can't blame you one bit. There's actually, I think, better momentum on the downside, and that's been that way even with the market holding up, right? So I can't blame you one bit. But what I would recommend or suggest you do is the flip side of what I'm looking for. Okay. When sentiment gets favorable for me, in other words, bears are leaning a bit, put players are leaning a bit, gamma gets into the red, be careful on the short side. Okay. Don't be worried about missing another short because you've been red hot in them. You know what I'm saying? Don't get run over. All right. And then once the squeeze comes, right, us bulls, we're looking for that sentiment squeeze. After that squeeze comes and you get the squeezometer back into the 60s, gamma into positive territory, all that stuff, and you see flow looks like the way it is and things may roll over again, or a sector like you like to do lotto looks weak, play off the downside momentum. So, but the key is to take what the market is giving you right now, especially if you're long only like I am, and that's where you're most comfortable. You don't want to jump out of your shoes here. Yeah, that's what I mean, right? You see bank flow, even if you see bank call flow and you got earnings coming up and you want to make something more of it, or you see big blocks going off in XYZ, and you don't want to be a part of any of that. You don't want to be a part of that. There's light at the end of the tunnel. All right, but that's a good segue to where we are right now. All right, and for those of you who weren't on the Sunday webinar and those of you who are non-members, I'll just quickly elaborate on what I mean on. Okay, up here, and you can see we were seeing, just simple 9 exhaustion signals across the board, meaning things were a bit stretched on the upside, and that's where buyers have a tendency to get tired. So you look for those type of signs. Sentiment, short-term sentiment got a little too hot at that same point. If you guys remember the sectors, individual sectors across the board, everything was pretty much scorched. All right, there were 2 sectors that weren't. All right, so all that now is cooling off nicely. Okay, they're not flashing buy signals yet, but they're cooling off nicely. All right, but in the meantime, like I said, we still have a trade out there, a tactical trade that we could look to take advantage of, and we got one lined up right now. Okay, so here's exactly what I mean. Tomorrow we come in and we get some follow through to the downside, and that could very well happen, especially off, a day like today where you get that ISM number and all of a sudden, people are moving money around the other way again. You could see some follow through to the downside. That's where you want to start looking for entries, okay, for that sentiment squeeze. All right. And here's an example of where I have the tendency to tell you guys a lot of times, just use your head, right? If we're seeing aggressive put sweepers, right? If we're seeing nothing but put buyers come in the morning, tomorrow morning, into weakness, okay, we don't have to pretend we're He-Man and jump in and find an entry on SPY into put sweeper heat, right? Let the flow, let sweepers give us a heads up that maybe they're looking to play a squeeze, right? They're looking to get long a couple of things, all right? And that's going to help with the timing of it all, right? Because a lot of times you'll buy early morning and the market continues to roll over all day and you're behind the 8 ball. All right, you're not gonna master it by doing what I just said, but it can only help as far as the timing aspect. All right, and if we see, like for example, we see, and Tim, option trader in the room is he's always screaming it out, but you see VXX put sweepers like we saw yesterday, but into weakness, even better. TQQQ, the leveraged ETF call buying. Whatever it is, even if it's spec action, that's our heads up. All right, the professional money out there, what is this? The professional money out there is positioning for a squeeze as well. All right, so now we could step out there and look for an entry. Yeah, well, I hope, yeah, I'll take that, Tim. I mean, Tim's saying, if we could get intermediate term sentiment back to a favorable slot, that would be great. We got some work to do though, but it's possible. We are in October. It's possible. But we still have some decent work to do unless there's some real deal selling over the short term here. But for now, like I said, day by day, tomorrow we get a flattish open, weak open. Keep a close eye on SPY, especially ETFs, inverse ETFs, for some clues that they may be positioning for a squeeze. If you're a member to private Twitter or the room, you don't have to figure this stuff out on your own. Okay, in my commentary, I always do. I will mention, okay, sweepers are positioning for a squeeze in TQQQ here. You know what I mean? So I will always bring it to your attention as early as I see it, if we see any clues from that. Okay, any clues on that horizon or whatever the hell I'm talking about. All right, so that's the game plan. And again, the key is don't look for more than what the market's giving you. If you get that snapback squeeze, right? Because here's what I'm saying. Like, this is the trade here. If you look at it, this is what we've been doing here. And it may change, right? But let's say tomorrow we open up weak. Okay. And we see some sweepers come into this, and we got sentiment on our side as well, right? So we're looking for an entry. A lot of times when you have gamma on your side too, this thing goes back here in a day, right? 2 days if you're lucky, so you can play around with other things. And that's where you got to fight the greed, yank it off the table. And even more importantly, especially if there's no flow out there, right? If they're not buying anything else and it's the same old crap, don't go buy something up here now and you sold your ES or SPY and now you're looking to buy Facebook and Netflix and Chipotle. You're taking the squeeze. Let it set up again. And eventually what happens is it's only a matter of time. Real buyers will show up and we'll do one of these thingies. And that's where we could get excited. But the entries are important when you're in this, because if you're buying at the upper end of the range and you're not getting enough on the upside, you get caught all the way down to the lower end of the range, and that can sting. And like the flow, for me, the flow is my guide of how aggressive I want to be, right? So if we see, again, another example, tomorrow into weakness, right? I'm looking for some clues that they may be positioning for a squeeze. If they come in and we see some quality buying, right, and they start tattooing stuff, that's going to be an indication that this whole little breather is over with, in my opinion. Okay, so at that point, then we can position and look for something more. But if we're just seeing squeeze flow in a couple names and we're looking to play just a sentiment squeeze, you take what the market gives you, and mañana trabajo, as I like to say. Tomorrow's another day. All right, anybody have any questions, especially those of you on private Twitter where I don't get to talk to you enough, but anybody have any questions on any of this? The setup, sentiment, anything? Hold on. Oop, I got to scroll here. Hold on. Gamma is just another thing we started to look at. Oh, good, Tree. I was just going to ask you too if you got that gamma explanation. Basically, the way we use gamma is we use it in coordination with the two other important things we look at, which is flow and sentiment. Okay, so when we have bullish sentiment signals line up, what the gamma basically is telling us is that market makers have upside risk. So the squeeze is worth it, right? If we have a decent negative number out of gamma and sentiment's on our side and we see some sweeper activity, what that means to us in simple English is that the sentiment squeeze that we're positioning for, that we think there's a higher probability for, can have some gusto behind it. You know, so if you ever wondered, Andy, these type of moves here, you see this? That's all because of gamma. All because of gamma. All right, if you really want to learn about it, there's some decent information out there. Wall Street Journal had an article who basically they mentioned that it's the most important mechanism in the market that not enough people are talking about, of why the market moves the way it does. But you can Google it, you'll find a ton of information. You know, you'll find a ton of information. But that's basically how we use it. So in other words, it usually happens, Andy, like let's say right here. Okay, we look short-term sentiments telling us that bears are getting a little too giddy. They're leaning on their bearish bets, right? Getting cocky in a sense. And gamma will have a decent negative number, and that tells us that when the turn comes, there's going to be a decent move out of it. Lotto saying, how quick do you give it to take the temperature on the morning sweepers? It depends. It depends, Lotto. It depends. Because a lot of times, I probably understand what you're talking about. A lot of times I get fooled. Like there'll be off the open, there'll be some decent sweeper activity. You know what I mean? That'll generate momentum. And then, you know, after the half hour of the momentum, that's it. They can hop on the other side and take it down the whole day. You know, so you just got to be ready for that. But, you know, if you don't develop that bias and you let the flow do the talking for you, right? If you're just listening and paying attention, there's enough information out of the flow that when it does change, you have time to react. You know what I mean? You have time to react. Like you can't say to yourself, oh wait, they were just sweeping SPY weeklies right off the open. Now it's 10:30, 11 o'clock and they're sweeping puts. Yeah. Okay. You know, don't complain about it. Do what you need to do so you can take some risk off or get positioned the way you need to get positioned. You know, because in my opinion, and I tell you guys this a lot, on an intraday basis, sweepers are just momentum. You understand? It's all momentum. All right. So if you're not interested in the, as far as the intraday price action is concerned, then you know you got to take a step back and, like I said, get the story out of flow. You can't look at each individual order and try to make it an actionable point. All right. But if you're like myself and a lot of others in the room that are fairly active and want to trade off the momentum, then, you know, you have to listen to what the sweeper activity is telling you. So in other words, if sweeper activity is all bullish and aggressively bullish and you're trying to short something in the middle of that, you deserve to get run over. You know what I mean? For the same thing, if put sweepers have the ball and you're trying to buy something while the board is lighting up all red, you know, all these trades. Yeah, I remember Lucci used to say this a lot too. When the wind is at your back, those are the best trades, right? You're looking for downside momentum. Let the sweeper activity confirm that momentum. Because you guys see what sweepers do, right? I mean, Roku was an example of that today. They generate momentum, okay? A lot of times we don't know how long the momentum is going to last in individual names. That's the tough part, all right? But as a whole, if sweepers are aggressively, right, you see the pace of call buying among sweepers have a nice tempo to it, for shit sure that's going to mean that the upside momentum is going to be solid, you know? And another important point okay, is what we saw today, which was neither. It was just one big slop fest, which with what? That I hate more than anything, you guys know. Blocks all over the place, right? How many times did I mention that today? There was an absurd amount of block trading, right, from the late morning all throughout the day. So when I see that, right, if sweepers to me on an intraday basis mean momentum, okay, and now I'm seeing block trading and sweeper activity mixed, for me that's telling me don't try to get cute and do nothing. This is just not, it's not the climate right now. Yeah, you may miss a winner or two into that flow, but who cares? Who cares? So that's generally what I try to do as best as I can. A picture perfect scenario for me is there's weakness and call sweepers into that weakness, because that tells me the momentum is turning, right? They're going to generate momentum. If there's negative momentum out there right now, and it's turning, So that's the ideal setup for me on an intraday basis. So I try to stay as close to that ideal setup as possible. The further away from that setup, I really try my best to do nothing. I'm not gonna lie to you. There are times I'll see action in a name I like, and I think, you know what, the climate's not really accommodating, but I think I can get a little momentum for at least a scalp. But I know that I'm just looking for a scalp, and if it starts to head south on me, you understand? I know that the climate's against me as well, so I'm not going to stick around. So it's knowing that, but that's the best advice I could give for anybody out there day trading. Forget orders, forget, the size and all that stuff. Sweepers equal momentum. That's the most efficient way to look at the action, and you'll understand it even better. Right? Roku gets hit. They hit Roku with one weekly sweep. All right. The odds go up that you may see some short-term momentum in the underlying, right? If they hit it with another weekly sweep, now there's a little better odds that you could see some momentum in the name. They hit it with 4 or 5 sweeps, right? Now you got even more favorable odds of momentum coming into the name. So that's the way I look at sweeper activity. You guys hear me talk about pace a lot, right? Because what happens is and a lot of this is quite often, especially like in the summer and stuff, when sweeper activity goes dead, right? And there's no sweeper activity out there. My takeaway from that is you can lose the momentum now. There's no momentum off the action. All right. But when there's a pace of call sweepers and you see one after the other, me posting them, they're hitting the board, that's telling you there's strong momentum out there. Right? You see with the high beta names a lot, right? Apple or AMD, where they continuously sweep those names, and you get the stock on an intraday basis go, right? And then sometimes at the highs or right around the highs, there's a little pullback or something, takes a breather like this, and then there's no more sweeper activity. But the sweepers along the way generate strong momentum, because what happens? They sweep, and a lot of this shit's machines. They sweep calls, they sweep weeklies, and market makers got to hedge that off. They're going to hedge that off. They're going to hedge that off, and it snowballs into even more momentum. And if you want to get a better understanding of it, you pull up an intraday. I don't have the volume on here on this one here, but you pull up an intraday chart, 1 minute, 5 minute, doesn't matter. And what you're going to notice is no matter what, I don't care it could be a 200 lot sweep. Well, depending on in the name, but it could be the smallest sweep. Okay. And if it's clean, you're going to see a reaction in the stock. You're going to see volume react, and you're going to see the stock react. Okay. Now, it may not do anything from that point. Okay. But you're going to see a reaction off that sweep. Now, what happens if they come in and hit it a couple more times? Right? You're going to get even stronger reactions. And that's what leads to riding the momentum in these trades. But that's the best way. Yeah, exactly. The market makers are hedging off the risk. See, that's what a lot of people don't understand, Tim. And I get a lot of Twitter trolls who throw this at me. Oh, for every buyer, there's a seller. That's not how the game works, you morons. For every buyer, there's a seller. Market makers have to make a market, okay? So they have to take the action, but what they'll do is hedge off the risk. So they're not eating it themselves. Doesn't mean they disagree with the trade. Makes me laugh, right? You hear people say that a lot. Well, if somebody bought those calls, that means somebody sold them. Maybe the guy who sold them is smart. Yeah, the market maker who sold them has to make a market. He sold them, but then he went and bought equity to offset the risk, so he don't have to get beat up. Right? They're not going to hedge off the risk coming from us. Right? We can buy as many calls as we want. They're not hedging off riffraff action. They're hedging off sweeper activity. That's what they're hedging off because they know that's the professional money. It's like, again, here I go with the gambling terms, but it's like Billy Walters or a professional gambler, right? He goes into Vegas and he's going to bet 100,000 on the Jets. Okay? You think Vegas is going to sit there, okay, Billy, yeah, give me the 100,000 on the Jets and hit me over the head. They take the bet and then they go to other casinos and spread that money out to get rid of the risk and put their money on the Jets. And then move the line, exactly. So that every buyer, there's a seller nonsense is useless. But yeah, Tim is making the point that most of you are aware that a lot of the momentum is coming off players, market makers hedging their risk. That's what they do. All right, but good questions. These are all things. And like I said, there's always stuff to do. I'm not trying to sound corny, but right, like in this environment, okay, if you're not really too comfortable day trading or you really can't get a feel, right, and you're waiting for this sentiment squeeze setup to come about and you're bored and you're itching, watch the board, right? Watch the sweeper activity as it comes in. Doesn't mean you have to play them, and pull up an intraday chart and see how they react. That's what I did, right? Like I have favorite spots I talk about, right? What I realized is a lot better movement comes out of call sweeper activity when stocks are going in the opposite direction or are in consolidation. How do you think I came to that conclusion? Because what I did, I was so fascinated by sweepers that, for months I just watched 1 minute price action on a 1 minute chart on every sweeper that I saw with my eyes. That's where you learn a lot about this game. Just watching, just watching. So, and that was a big deal for me because I was having a lot of trouble. My biggest problem was, like, I'll give you an example, Roku, right? Let's say it did this, and then there'd be some sweeper activity up here, okay? And I told you, when I got into the game, I was taught to buy the breakout like a real riffraff sucker, right? Wait for volume and wait for that big candle, and that's where you go. Where now, that's a short, in my opinion, You're right, Tree. It used to work a long time ago. You're 100% right. It did. It did used to work a long time ago. You're right. Okay. But my problem was like chasing sweeper activity up here. You understand? And what would happen to me, I'd get some green and then it just go dead or roll over from there. And it was frustrating. Okay. What I realized was the sweepers that I was ignoring because they came at worse looking spots were the better ones to play. The ones down here. You know, that's where the most juice came from. Yes, exactly, Martin. Exactly. You know, so, but the point I'm trying to make, and you hear me talk about this all the time, you discover this stuff on your own, right? This is what you determine you feel comfortable with. The only way to learn anything in this game, you can't look to make a bet on everything. You're not going to learn everything that way. You know, you're not going to learn enough about yourself. When the downtime, instead of going to walk your dog or instead of posting on Twitter that you're going to the gym, okay, sit your ass behind the desk and, you know, watch with your eyes. And trust me, you'll learn a lot, a lot. You know, you'll learn a lot about how these things work. TSM, yeah, Tree, you know what it is? I think I figured out what the hell's going on with that thing, why it's so strong. Taiwan is one of the best economies out right there right now. No, Taiwan, that's what I'm told. Like Taiwan supposedly is already in recovery mode economically. So this is out of there. Is it? They have a big chip in Apple? Oh, so that probably has an effect too. You know what's crazy? We all played it off that weekly action, remember? And the stock couldn't get anywhere. The market wasn't helping either. The following week, it exploded. Oh, yeah, huge Jan buying. Huge. They bought every dip. Every dip they bought in this thing. They had those Jan risk reversals and everything there. Everything. Yeah. And that's what makes what we're in tough too, Tree. Because you see names like this and you want one. You know what I mean? And right now, there aren't too many like this. You know? Like you said, this is, you're trying to figure out what's holding this up compared to the rest of them. But a lot of stuff needed to cool off. So a lot of good is coming out of this. You know, this is what we wanted. You know, this is what we wanted. We want them to get bears involved again, right? You don't want the bulls to get cocky. You don't want the bears to disappear. Everything we wanted to happen is slowly happening. We just got to allow it to happen. You know, we got to allow it to happen. October's a, you know, crazy month. I think a lot of people are talking about that already, so I don't know how crazy it could be, you know, so don't fall into that trap. But we'll see. We'll see. Buyers will show up at some point here with the Fed at their back. Yeah, that's what I mean. I don't know about crash or big drawdown. I just don't see it with the hedge funds net short. You know what I mean, Tree? I don't see it. I don't see it. But it could be, you know, a choppy mess. I could definitely see that happening. You know, I could definitely see that happening. What's pissing me off is they're going back into these recession type names again. It's getting annoying, you know? You talk about crowded trades. These things are loaded to the gill. Everyone's in these things. Like these utilities, this is unbelievable. Are you still in that utility tree, that VST? That had a nice move. But yeah, a lot of the nice. You've been trading this thing nice, and it's had some nice size pullbacks too. You know, to get you back in. But so we'll see. Right now, we were hoping the rotation. It's looking like they could go back into software, and you guys like that. So I would keep an eye on that. Like, look what they did today, right? Coop was green. There was quite a few of these things that held up well and looked good. Wasn't Visa in them? You know what I mean? These things held up. And it was the cyclicals, like the Caterpillar. Look at that. And that caught us some put action today, Caterpillar. You believe this? You believe this? They're just not ready, maybe. They're just not ready. Let's see this. Yeah, this thing was up today. So, we'll keep an eye on that for even these quick plays, This SE now, believe it or not, in my opinion, has a better shot of going now with the cyclical trade off the table than with the cyclical trade in play. So this SE is a must watch right now. Where are you, Yosti? Remember we were talking about that? Like, that was my biggest fear, that if they do rotate out of these things and into cyclicals, this SE is going to have trouble, making any headway. But now, if the money's trying to find these things again, yeah, the Jans, that's what I have. But maybe we can even catch some quick trades out of these things. We got to keep our eyes on these things over the short term here. If we see some flow there, we got to jump, because there'll be people who want to get back in these things quick if they're back in play. What Twilio do? I got the Jans tree in SE. I got the Jans. Like, look at Twilio. It hasn't done a thing yet down here. And where are you, Tim? You know the Twilio better than anybody. They come in with a little sweep in the morning, right? And that's an ideal spot right there. Did Win hang in there? See, it doesn't even make any sense. I'm telling you, I'm more confused in individual names than I've been in a long, long time. Yeah. It did hang in there. Tell you, I'm not going to sugar it. It's tough out there. Individual names are tough. Anything outside of a quick trade, as far as clarity, even out of the flow, I don't know what they're positioning for. There hasn't been any theme out there. I have no idea what they're trying to do. It looks like selectively they're just trying to find some spots. That's about it. All right, guys. I'll let you go to your dinner. All right. So tomorrow, even those of you who are non-members, we got to set up, right? You get some weakness tomorrow. And even if you guys follow me on Twitter, you see me posting some sweeper activity into that weakness, that might be a go for a squeeze. And then maybe we could get a nice little pop out of it. We'll get gamma on the side too. I think we closed a little under -1 on it. All right, I'll post all the sentiment stuff when it updates. For those of you who are members tonight, it'll be an interesting night to take a look at that stuff with the weakness today. Be good, everybody. Always a pleasure. Thanks for stopping by.